Distribution provided by Cloud Sigma, the cloud that adapts to you. Visit cloudsigma.com/thisweekin for a free $200 credit.
Today's episode of This Week in Startups is brought to you by ShareFile from Citrix. Secure file transfer built for business. Visit sharefile.com, click the microphone, and enter TWiST for a free 30-day trial. And by MailChimp. Manage lists with up to 2,000 subscribers and send up to 12,000 emails per month for free with MailChimp.
Hey everybody, it's going to be an amazing This Week in Startups. David Cohen, the founder of TechStars, is with us. They've graduated hundreds of amazing startups, and it's going to be an amazing episode where we talk about entrepreneurship, accelerators, incubators, angel investing, and just what makes for a success in the startup ecosystem in 2013. Stick with us. It's going to be an amazing episode, one of the best ever.
That's what it's all about, man. They said, money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody. It is time for This Week in Startups. Maybe you're listening to this on TuneIn. Maybe you're listening to it on your iTunes. Maybe you're listening to it on, what are those? There's like a bunch of apps now. Stitcher, I guess, is one. All these different apps are featuring This Week in Startups. And thanks TuneIn, thanks Stitcher, and thanks most of all to our friends over at iTunes. They feature the show sometimes, which is really nice of them. And the show is growing in such a major fashion. I have to tell you, I'm super motivated for 2013. There was like 2012, I was kind of like getting tired of the show, to be honest. I was like, I don't know how much more show I have left in me. But then, boy, we leveled up on the guests. The technical issues went away. And so many people participating in the event. It's really recharged my batteries, and I'm hearing great things from the audience too. If you're one of those people who's a fan of the show and you see me at an event, or if I go to take a leak or something like that, don't be the weird person who doesn't say hello but then stares at me. I've been having a lot of this, David. You know what I'm talking about?
I'm familiar.
Yeah, like people like come up to you and like they're in the urinal next to you and they're sort of looking at you and you don't know, like, are they looking at me because they're a fan of the show or they know my work, or are they looking at me for some other nefarious reason?
Yeah.
There's a very easy way to sort all that out. It's just to say, hey, Jason, fan of the show, love the show. Baba Booey. Just yell something out. Just be like, hey, I love the show. Hold on a second. That's my wife calling. I should. Would it be fair to do it's my wife's ringtone. Don't tell her. It's the Imperial March. I got that from.
Yeah, I'm wondering where you got that.
Brad Feld. Mm-hmm. But, there's a big controversy about Brad Feld answering his phone during the show. I don't know.
Is that right?
Did you hear the Brad Feld episode?
I saw the episode, yeah.
And, by the way, that's David Cohen, everybody, the founder of TechStars. And everybody was like, oh, my God. There was a thread on the TWiST list, which is like the back channel of the show, twistlist.co. And they were like, he is so rude for answering his phone during the show. And then everybody came to his defense. No, you have to read the backstory. He's got a thing with his wife. He's trying to maintain a great relationship. It was really interesting.
Work-life balance, and if that's the priority, that's what you do, I guess. I've seen him do it in a keynote in front of hundreds of people. He does it all the time.
Right. And so it would be rude if somebody said you answer your phone during a keynote or whatever. If they asked me in a bubble, I'd say, yes, of course, that's rude during the show. However, there's always context. And there was always intent, and his intent is always, he's got great intent, and the context is maintaining life-work balance, so he's sort of making a point. Hey, some housekeeping notes. The TWiST Live event series has been going fantastic. We've had 2 so far. Jeff Clavier, the French angel investor extraordinaire, one of the original super angels, he just crushed it in January. Hold on, my wife again. By the way, Imperial March is not just my wife's ringtones, it's everybody's ringtones. But then we had Phil Libin from Evernote, did the February, and believe it or not, Dave McClure of 500 Startups, a good friend of both of ours, will be doing the live TWiST in February 8th. That's coming up. TWiST Live, the number 3.eventbrite.com. TWiST Live, the number 3.eventbrite.com. And as David Cohen knows, I'm always trying to rip off startups and get as much money as I can from them and abuse them as much as possible. So there's your ticket price, $2. Basically, I told my team every time we do one of these events, I want you to increase the price by $1.
Yeah, $2. That's outrageous.
It's outrageous.
How do you get away with that?
I don't. It's so crazy. Like everybody is tweeting me today because some other Credit Suisse event in New York is charging people to pitch VCs and angels.
Yep.
It never goes away, does it?
No, it always happens. We always rail against it.
Ugh, it's so great.
Don't pay to pitch.
Don't pay to pitch garbage. Ugh, anybody who is associated with that Credit Suisse or, probably the thing is Credit Suisse probably doesn't even know that they're supporting an event that's charging entrepreneurs to pay.
The other thing is a lot of times the actual investors don't know that they're showing up at an event that's charging entrepreneurs.
Right. They're duping them. It's so ridiculous. Ugh, it's loathsome. But hey, something that's not loathsome and something that I've really been enjoying is ShareFile. That's the most awkward segue I've had into it. Into a sponsor. Something that's not loathsome. Oh, kill yourself. Okay. ShareFile by Citrix. What a great product. This is professional file sharing for corporations and for startups. Send files of almost any size. Access files from any computer or mobile device. Safe and secure because it's built for business, like the other Citrix products, like GoToMeeting, which I use all the time. Rock solid, like GoToMeeting. And what's really interesting is I love this feature here. I'll just tell you about a couple quick features. You can request a file. And so if I request a file, you don't even have to have an account. I just click request, send you an email, says send me that file, boom, you send it to me, and I get it. Email alerts when someone uploads or downloads, and really great auditing and tracking. So I can see, gosh, how many people uploaded or downloaded this, what activity types between these things. That sounds like maybe overkill, unless maybe you're sending a deck with your startup or you have a document library and all these important things. I really love the product. We've been using it here. And if you want to try it, go ahead and try it. No credit card required. Smart. These guys are smart. They understand no credit card requires means people are going to try it. Go to ShareFile.com, click on the radio microphone button, and use that promo code TWIST, TWIST. Thank you so much to my friends at Citrix for making at ShareFile. What a great product. And independent media like this is only made possible by our friends at Citrix and at ShareFile. So go ahead and thank at ShareFile on your Twitter, Google+, Friendster, Spoke, Rise, or 6 Degrees account. Did I get all those social networks?
MySpace.
MySpace. Yes, yeah. MySpace, of course. Yes, on the new MySpace. Sure. Dave Cohen launched TechStars back in Boulder in 2007. They have 4 programs now: Boston, Boulder, New York, Seattle, and they've got a couple of powered by TechStars now, which is the cloud one in San Antonio, the Microsoft one in Seattle, and the one I was most interested in, the Nike Plus one that just launched in Portland. 10 companies per program location are selected. Thousands apply, obviously. Fewer than 1% are accepted, so it's pretty hard to get in.
It's competitive.
Very competitive. Each startup gets $118K from TechStars, and an optional $100,000 convertible note. And TechStars itself raised $34 million from the Foundry Group, SoftBank, RRE, Avalon, Mercury Fund, SVB, Financial Group, IA Ventures. Of its 176 grads, a whopping 139 are active. That's impressive, 79%. 19% have failed, 11%. 18% have been acquired, 10%. And 142 have gone public. No, I'm joking about that last number, but that's what he's hoping for. On average, grads raise $1.56 million. And over 1,000 jobs created. Welcome back to the program, David Cohen.
Psyched to be here. It's good to have all those stats.
I just like to go through them because you know what? A lot of people are tuning. This is something the show leveled up. I think from some of the big interviews that have occurred over the last year. Brad Feld, Saka, a lot of great folks have been on the program. And a lot of promotion from, like I said earlier in the program, TuneIn, Stitcher, and iTunes features. We got a lot of new people listening to the program. I like to make sure they understand who's on the program, get little stats out to them. But TechStars, I mean, you're 4 or 5 years old now.
Since 2007, so 6.
6 years old, wow. And in those 6 years, did you envision it would get to where it is? In your mind's eye, did you think it could get this big?
You never do. It's just like any company I ever started. You do it because you love it, and no idea it would be in New York and Boston and other places. Right. No idea we'd have these great brand partners.
Yeah, let's talk about those brand partner things, because that's something that's happened in the sort of second half of the last 6 years. Why? How do those emerge? How do you wind up having a Nike, a Microsoft, or I don't know who's sponsoring the cloud one, Rackspace or somebody?
Yeah, Rackspace is around it.
So those are big names, public companies, obviously the biggest of the big. Do they come to you? Do you pitch them? How do those work? How do those happen? Take me through each one.
Yeah, I mean, it's all inbound. So, these corporations want to innovate. They haven't really figured out how to do it historically to really put a lot of entrepreneurship around their own business and their own ecosystem. So, if you take Nike as an example, they come to us and say, we love what you're doing. Can we do one around our ecosystem of the Fuel API? We're really into quantified self. We like that space.
Yeah, it's genius.
I have a lot of personal gadgets that I use in that space, and love
and
Nike.
You look thin. How many pounds have you lost?
I'm less fat. Yeah.
You're less fat. Me too. I lost
35.
35
yeah.
pounds. You were a little pudgy, weren't you?
A
man?
little. Yeah.
Your face is so thin. I'm so proud of you, David. Isn't it the best feeling when you lose weight?
It is. When you do it well.
Let me just tell you, how many pounds are you from your target right now?
I'm actually 2 pounds under ideal for me. So
Perfect.
I'm there.
Yeah, I have to say, the people I've talked to, I remember Mark Cuban saying, the one thing he was wish he could change in his life at one point in time was that he was overweight and he couldn't get it under control. It's the most powerful people in the world. They just have a hard time with it, which I think speaks to how difficult it is to stay in shape.
It's hard because if you're traveling, I travel a lot, so do you, right?
Yeah.
And you're always eating out. I remember eating at a burger joint in New York with you.
Yeah, when we're eating milkshakes with Kahlua in them at 1 in the morning.
Yeah. And, it's a lot of that, right? You're hanging out with people and you sort of have to just learn. And that's what I did. I relearned how to eat well even when I was on the road.
And Nike says to you, you guys run it, here's $1 million or something?
Yeah.
How does the economics work? And
Yeah.
how do you, as a startup, how do you balance the startups? There must be some fear. Oh my God, I'm in this Nike thing, they're going to steal all my ideas, right? Isn't that the first thing people think?
Totally, but see what we figured out is the combination of Nike and TechStars is pretty powerful. So TechStars is the investor. Nike is really just doing this as goodwill. They don't have, they're not on your cap table if you're a startup in the program. You don't have any obligation to them, but they're providing, the funding, the access to their exec team, obviously a lot of great opportunities around their ecosystem.
And so how do you deal with that issue of strategics or where do you stand on, personally, strategics are good or bad for a startup? Because I've been hearing my whole career, stay away from the strategics, but I've actually had great experiences with it. So where do you stand?
Well, I think generally speaking, it limits your exit opportunities. It limits, distribution opportunities. So that's why it was really important to us to make sure it was TechStars that's the investor in these companies, Nike or Microsoft.
But it is Nike or Microsoft's money.
It's their money, but we're the investor long term.
Got it.
We're the ones that gain from being involved, and they have no control. You don't have to go do something with them.
Got it.
But yet they're giving you all this access.
So they're like a limited partner. Is that how you
essentially,
phrase it? Yeah.
essentially. But just knowing those people in the network and talking to them about the opportunities you could have together is pretty powerful.
So you get the upside of the strategic relationship
Yes.
without the, I don't know if it's a scarlet letter, but the potential downside of Nike's competitor or Microsoft's competitor, Rackspace's competitor saying, we can't work with that company.
Exactly right.
Because that's a Rackspace company.
And that's why we insisted if we were going to do it, it would be that way.
And Rackspace and the cloud one, those have graduated one class each? 2 classes?
The cloud one just started the second class this week, actually last week. And I'm heading there tomorrow.
Oh, great.
So.
How do you define, how does a Rackspace define success?
Well, I think with any of the corporate programs, they really are looking for learning. So they want to understand what the startups want to do with their tools, technologies. They're looking for PR, right? They want to be seen as helping them.
Right.
And of course, they're looking for biz dev, M&A, investment opportunities.
This puts them in the pole position because if they've already been a limited partner and they've built up some goodwill, maybe they know a couple of people there, that helps.
Yeah, and it brings those companies closer to our overall system around TechStars. So we're still super focused on the more traditional programs where we're super selective. Having Nike, having Microsoft, Rackspace, and others helping those companies is a net add as well. And
let's talk about the size of the classes.
Yeah.
What is the optimal size for a TechStars class?
11.2.
11.2. So it's actually we've gotten to.
So we've done everything from 9 to 13.
Okay.
We are experimenting now with 14 for the first time in Boston, so that's stretching the boundary for us. We don't think if you have more companies than that you're really meaningfully helping them. We want to help each one. It's not a funnel for us, it's family, once we fund them.
Not a funnel, it's family.
That's right.
It's sort of like an internal mantra.
We want them all to be successful. We really focus on a smaller group of companies. They tend to know each other really well at that size. They tend to get a lot of learning from each other, not just from the mentors.
Because you can remember 14 people's company names.
Yeah.
When you get to 40 or 80, like I guess where Y Combinator peaked out, it gets a little bit hard, I guess, to manage something like that.
I don't think the companies even know each other.
No, clearly they don't.
Right? And if you sort of do the math, right, how many meetings are they really getting with, the person that's running the thing?
Right, yeah. I mean, Paul Graham, as successful as Y Combinator is one human being. He can't possibly meet with all 80 companies on. But they pull back a little bit, which I think is probably some recognition that they got a little bit over.
Yeah.
Let's talk about the Series A crunch. A lot of debate, a lot of people talking about it. Series A crunch, for those listeners who are new to the program, you would define as what?
Basically, a lot of companies out there that have been seed funded that are all looking for their Series A, and not enough Series A rounds to go around.
So you have a bunch of angel investors who've put in $250 to $1.5 million, I guess would be an angel round these days. And the Series A round is typically $2 to $5 million.
Yeah.
And that's done by VCs. Let's call them professional investors.
Yes, because angels are not professional at all.
No, we're very unprofessional in our approach. But they write a bigger check.
They do.
They have a bigger fund.
They do.
Why hasn't, if the quality of companies has gone up dramatically, why hasn't the ability to fund those companies gone up? You would think that VCs, the VC pool would get bigger. The number of VCs would get bigger because clearly the companies coming out of accelerators now are 10 times better than the companies that were just coming out of the angel investment environment just 10 years ago. Would you agree with that?
Well, certainly the ones coming out of TechStars, yeah.
Well, I know, but I think on average they're much more well thought out.
Yeah,
I mean, there's
they
much
are.
more access to information. The tools are better.
There's better companies, right?
Yeah.
And there's plenty of them.
Right.
There's only a certain amount of partners out there that can do a certain amount of deals. Certainly, there's more capital. That's a cycle that comes and goes over time. There's always going to be ups and downs in the market. My belief is ignore it, right? If you build a great company, there's plenty of funding out there for you.
So although statistically it could be scary, just ignore it and focus on your product.
Well, statistically, startups are scary.
Yeah, I mean, what's the expectation on startups, in terms of success?
Big
2 out of 3
success?
guys.
Oh, way more than that, I think.
Yeah.
If you're talking about real success.
Real
a lot
success.
in an acqui-hire, of course, but I don't know that they would define that as success if they're being honest. So I think there's plenty of capital if you build a great company, and if you're out there to build a not great company, then you're going to have all kinds of problems, and this is just one of them.
And so what's your advice to being one of the anointed Series A startups? What do you think in 2013 a startup has to show to a VC in order to get the $3, $4, $5 million check?
Well, I think it's really key to read your Series A Crunch newsletter that you sent out.
Yes, exactly.
Of course, I stopped reading because you said investors stop reading.
Exactly. Halfway through it.
But I thought
I want your position on it.
I thought that was an excellent run through. I mean, obviously, if it's more competitive, they're looking for more traction, right? They're looking for more social proof. So who else is around the company? So it's always been part of the game has always been surround yourself with great people, right? Have great supporters that help you stand out, and that's one of the secrets of a great accelerator, I think, as well.
So let's talk about that and unpack that a little bit. The term is social proof that we hear. AngelList talks about social proof. Some people say social proof is nonsense.
Yeah.
Some people say social proof is everything you're saying. It's important right now. What is social proof? Let's go through it like on a more granular basis. Unpack it.
Yeah, I mean, I think surrounding yourself with great people and having great customers who will talk about your product, right, who will vouch for it, matters. So social proof in the sense of just, get a share on AngelList or something like that is one thing.
Right.
I'm really talking about, who are your customers, right? Do you have a name brand customer? Maybe you sell them the product for a little less.
Right.
Right. If you can get a customer like Nike that people know, right, you might discount a little bit to get them on board and saying great things. So, advisors, again, another thing. You can have a lot of advisors around your company. People know that often that's just BS.
Right. Just free shares. You gave somebody 50 basis points.
If those advisors are actually doing real work and really bringing you customers and talking to investors on your behalf, that can really help.
So there's really 2 high order bits there if I'm reading you correctly. Number 1, clients equal the ultimate social proof.
Sure.
And advisors who are meaningfully involved, not just on your AngelList profile on your website, but meaningful would be helping hire, maybe tweeting and blogging about the thing, maybe helping you get customers.
Yeah, I think maybe even being on the board, right?
Yeah.
So being sort of a partially active role in the company, those things can really help you get noticed in a crowd. It's the same thing that we see with our demo day, right? There's 1,700 startups applied to TechStars New York, right? We're going to fund 10 or 12. So for the investors around the system, that's a pretty strong signal that they should pay attention to these deals over other things.
So getting into an accelerator in and of itself
Can help.
Is an absolute awesome first step for social proof. Of the 10 startups that graduate from each class, on average, how many get funded? Not your funding, but additional funding.
I think it's on the stats page, but if I remember, it's about 75%. So
75%.
3 out of 4 will go on to raise an average of 1.5 million, I think.
And the ones who don't, what happens to those companies? What's the advice to them when they've only got whatever it is, 100,000, which means 3 to 6 months of runway?
Yeah. Well, a few of them are bootstrapped. There's this concept that people sometimes forget about, which is not raising any money, because that's not the measure of success. So some of that group is just bootstrapping with this thing called revenue, which is very sexy to me as an investor. Of course, there's some that will struggle along and stay alive for a while, and then ultimately, either die or sell the company early in an acqui-hire type fashion.
Right.
But advice to them would be, if you can't raise finance, go and get customers. That's the best form of revenue.
Got it. And so getting customers and having some revenue, we hear this debate: focus on growth at all costs. Scale is what matters. And then you're saying, hey, for that group of people who couldn't get funding.
Yeah.
They need to think about revenue.
Yeah, and I'm in that group. My first company was in that group. I didn't understand
Me too.
How to pitch, for capital, and we never raised any money. We ended up getting a $100,000 loan from our first customer. So there's other ways of sort of getting some fuel for the business.
Do you feel like there's a certain sense of entitlement in the startup community right now amongst the group, or some portion that, like, I just deserve an A round because I'm working hard. I'm putting in 18 hours days. I need it. Like, it's not results based. It's like, I'm working hard. Why am I not getting a VC to give me $3 million? And this sort of like over-reliance on investors.
Yeah, the pop culture drives it a little bit, right? I mean, we watch the Facebook movie, and we hear about the YouTubes and the companies that just go crazy, Instagrams, right? So, well, we're doing something just as interesting. Where's the funding? I need it. Right. Sometimes it's not enough to have something interesting, right? You've got to have real momentum, and it's got to be viewed as a real business.
Are people gaming the momentum metrics now? I've been to a lot of and so because I've been to a lot of demo days, and everybody's got a hockey stick. And I know how these games are played because I'm an entrepreneur and an angel investor. Anybody can go buy a bunch of traffic on AdSense or StumbleUpon and make page views, downloads go up and up. And it feels like people maybe are taking that seed accelerator money or some seed money and just painting a picture as opposed to studying their actual customers.
Yeah, and I would crush anybody in TechStars that tries to take that approach, because it's not sustainable and it's kind of stupid, right? I mean, and I think the smarter investors understand that, and they look for indications of that kind of behavior. Right. So it can actually work against you if you're talking to the best investors. They're going to understand what you've done, and they're going to see that you're trying to game it.
Let's talk about valuations.
Yeah.
About a year ago, it felt like things were out of control. I bowed out of a lot of investments I wanted to make because I just said, if I'm putting in $10,000 to $50,000 and your valuation's $10, $15, $20 million or an uncapped note, there's just no way for me to play in that area because I think that the chance of success is, X, and just across the portfolio, it's just not going to actually mechanically work. Have things gotten more logical? And how do you coach your startups on how to not, scare off savvy angels?
Right. I mean, from my perspective, no. I mean, valuations are still a little out of whack. But again, it's just the cycle.
What is out of whack to you for somebody coming out of an accelerator?
A couple of people and a dog and an idea and a prototype, off of a napkin, raising money on 5, 10, 15 million pre. Right. I think those companies realistically should be in the 2 to 4 range, typically. Now, if you have, a million users and lots of daily actives, I mean, it obviously is going to increase, or if you've got a track record. But, TechStars is not in San Francisco. There's a reason for that. Right. It's a little out of whack there. It's extremely out of whack. Right. And it's hyper competitive. And I think what's happening in that ecosystem is that entrepreneurs in many cases are driving away the good investors because they're focused on valuation.
Yeah, it's driven me away.
There you go. So, and lots of people say the same thing. So I'm very disciplined about it. I'm investing and I'm focused on valuation and getting a reasonable deal. It doesn't have to be cheap, just reasonable.
Yeah, I'm looking for reasonable.
Yeah, fair, right? And the best entrepreneurs get that. and they want the best people around the system, and they value the people and their experiences over purely the valuation.
So optimizing for valuation short term makes you feel good.
Yeah.
My company's worth 10 or 15 million, but long term, you may not get the Kevin Rose, you might not get the Shervin, you might not get the Chris Sacca or the Calacanis or the Dave McClure, the person who, Dave Cohen or the Brad Feld, the person who's more intelligent about that.
That's right. I mean, and we have lots of deal flow and lots of things to pick from, right? So we're in the end, it's a seed investment, and you've got to be able to make a reasonable return. There aren't that many companies that are going to exit for billions of dollars, right? There's going to be a lot that are 100 million, 200 million exits. That's got to work for you.
All right, when we get back from the commercial break, I want to go through the specific statistics here because I'm looking at the $250 million. You guys have surpassed $250 million in funding for your 176 startups. Truly an impressive number. And I want to go deeply, deeply, deeply into stories of companies that you felt you had no choice to accept. So while you're thinking about that, what were the signals that you just said, this company's in? This company's in TechStars. There's no debate. And why? So just think about that. Noodle on that while I'll tell the audience about, so easy to do this commercial. You like that, Jeff? Superfan Jeff is here. He's give me one, Jeff. You're a superfan. There you go. Everybody loves MailChimp. I've been using MailChimp. And people ask me, hey, what's going on with Mahalo? What's going on with Inside.com? And it's going really well. We got funded by this little company up in San Bruno, YouTube, that is having us do shows for the interwebs. And so we have 9 shows. One of them is called MMA Search. I don't even talk about this stuff because I'm trying to figure it out and not tip people off. But I'll tell you about it right now because it's related to MailChimp. And we said, hey, on our websites, please sign up for our mailing list, get our app. And we did this really little simple thing here. Sign up and get Squid's 10 secret moves, right? And we did, in our videos on YouTube, we sent people there. 400 people signed up in 2 months for this email. Those are now our super fans. Like Jeff is a super fan of This Week in Startups. Super fans, you get their email. And then when we email them, they are the first people to then go amplify the YouTube videos. This is from Jason Calacanis' secret playbook. You get the email addresses of your superfans and you curate superfans. They then do the heavy lifting for you. When you need to get people to comment on a story or to vote something up in a social network or amplify something or just tell you, does this episode of the show, MMA Search, suck or not? What episodes do you want to see us do? We actually have our directors here at Inside.com, the new product I'm launching. Mahalo is being sunsetted. You guys heard that. It's doing well. It makes a couple $1 million a year, but I have to sunset that brand and work on this new one, Inside. And email is at the core of what I'm doing. But I don't talk about it because it's such a great secret. But I just did, so I'm an idiot. But anyway, listen, you need to get MailChimp. Go to MailChimp and use email. Emails are for life. Social networks are for 6 to 12 to 18 months. People change social networks. Like I said, they change their underwear every 6 to 12 months. Well, hopefully more than that. That doesn't make any sense. Listen, MailChimp, the free plan is always free, 2,000 subscribers and 12,000 emails per month. And they're constantly releasing new awesome features like mobile-friendly email templates, drag-and-drop file uploading, and the free plan is always free. There's no contract, there's no trial. They're super confident that you're going to love it. And the launch ticker, launch.co, 60% of the people who get the hyper ticker, which is the multiple times a day, and over 40% of people open the email every day. And that's the HTML email is a portion of that. So it's probably even 60, 70%. MailChimp people tell me I'm one of the record setters in terms of open rate. You really have to learn how to do this. And the MailChimp platform teaches you how to get higher open rates, teaches you how to A/B test subject lines, so you can put in 2 subject lines, and then whichever one, send it to 100 people each, whichever one performs better on open rate, then they send the other 10,000 emails to those people. Just genius stuff like that. They've really made a great product. I've tried to invest in the company. They won't let me because they're so successful, but they're huge sponsors of my program, This Week in Startups, and the Launch Festival. Thank you at MailChimp. Everybody thank at MailChimp. Okay. You must feel so proud when you pull up your public statistics. This has got to be just such great vindication for you to have started this in the summer of 2007 and only raised $5 million for those 10 companies. But then the numbers go up. 12 million, 43 million, 40, 20, 20, 50. And all of a sudden, after doing whatever number of classes it's been here, I'm trying to see, but that 176 companies raised $274 million.
Yeah, and it's light, of course. You don't publish all the rounds that have happened, but
Yes, right. Right. And actually, it's 125 of the 176 got funded for that amount. So it's even a bigger number. It's whatever it is, a couple $1 million each. That's got to feel great, huh?
Well, it feels great, but ultimately what feels great is, we've now had 18 exits out of the TechStars portfolio. And I'm working on another one this week, but that's really ultimately, when the entrepreneur sort of achieves their dream is what matters. And the funding is just one step along the way, and it's an imperfect measure, but it obviously has been, awesome to be around it.
And look at this. I mean, you go through every single one of these and say FoodZ was acquired by Joyous, Daily Burn was acquired by MindSpark Interactive, and this company failed. Buy, Play, Win failed. People Software Company failed. I mean, you actually list your failures.
Yeah.
This is an incredible level of transparency. Yeah. Why? Why is this important?
I think entrepreneurs deserve it. I mean, I think every program that's out there should list the companies they've funded. We went so far as to essentially give this tool away that tracks a portfolio. You've seen CDB try to do some work in this area now, but they have to update the numbers all the time. It'd be better to have the actual accelerators do it.
Right. And this just keeps you honest, huh?
It does.
And if you measure it, you can manage it.
That's right. And again, sometimes the criticism as well, you're overly focused on funding, and we're not. I mean, we really are focused on long-term value of the company,
right?
And helping the entrepreneurs accomplish their dreams.
Right.
So we'll only know the real value in the end. Just because you've raised this money doesn't mean it won't be lost money.
I just love the fact that you're listing full-time employees, because full-time employees is if the company is doing well, the full-time employees is a pretty good indication.
And this is data you can get. It's always out of date. Companies sometimes don't want to disclose how big they are, how much funding they've really raised, but it's a good, proxy for it.
So, in the last couple of years, what's a company? You could say the name of the company. I don't think there's any harm in doing that, but if you don't want to, you don't have to. But what's a company that the founder came in and there was just a big, huge neon sign above them that said, accept, accept, accept?
Yeah.
Tell me that one, the one you're thinking of.
I guess jumping to mind would be Isaac Saldana. We were talking about email. It's interesting to hear that Insight is about email.
Inside.com isn't exactly about email, but
I didn't know that.
I'm tipping a little bit.
I've been trying to figure it out piecemeal here.
Yeah.
It's also an email company called SendGrid, but
they've been responsible for the program. They do great.
It's the app transaction layer, not the newsletter layer.
Right.
Meeting Isaac, actually, it was here. It was at LAX, at a Marriott next to LAX, and I just remember, meeting him and his team, and it was another level of they understood the problem, just technically, right? They had experienced the problem. They were pissed off about it. Their level of technical understanding of what they were trying to accomplish was very, very high. And every time I talked to them, I was more impressed than last time.
So if we were to put a word on that, what word would you put on it?
I think it's just, passion and its knowledge of the space.
Got it.
And, the interaction from meeting to meeting being better and better every time.
Got it. So there's a certain depth of their knowledge, expertise, if you will, and a thoroughness to it that you saw over multiple occasions.
Correct.
And that really is something, Mark Suster has talked about this, connecting the dots.
Yeah, lines, not dots, but it's really curves, right? I mean, it's like how quickly that changes over time.
Right. And if the person's enthusiasm wanes, or their knowledge doesn't seem to be growing, or their insights seem to be stagnant, then you start thinking maybe this project isn't going to get where it needs to go.
Yeah, it's like every time I hang out with you, it's a better interaction. I get more excited about what you're doing. That's what I'm looking for. Mm-hmm. I've also funded companies at the other end of the spectrum. We have a company called Oobly, which is a plush toy that you stick your old iPhone into and it comes alive.
I know this one, it's genius.
They're going to hate me for saying it. Sorry, Carly. But I didn't love it when I first saw it, right? But the founders had so much support in the community, and they were so passionate about what they were doing that, again, every meeting was better than the last, and eventually I fell in love with it.
So that would be the slow burn, the slow boil, like just slowly warmed you up to it. And what were the things that warmed you up to it? Was it, in fact, the passion of their customers?
I think it's, getting the product in the market, getting a bunch of great feedback, leveraging the community around you. I mean, they were just great at getting everybody that interacted with them to be a fan. Right, and so you get the sense that these guys,
transference of enthusiasm.
Yeah, these guys know how to build a brand. They're community builders. I remember that with GroupMe, which is not a TechStars company I funded. Very much like they could build that brand and make people feel passionate about it.
And what's going on with GroupMe? They were like the media darling $40 million first round, and I haven't heard of them.
Well, they were acquired.
They were acquired.
Yeah, Skype,
Yeah.
Microsoft. So it went the way of Skype and Microsoft.
Right. So sometimes those things tend to disappear.
Yes.
They get bought and they just...
they're working on the social layer of all that, but yeah, it was
Right.
acquired a while back.
Yeah. So let's think for a moment about meetings where the person said something that turned you off so much that you felt like you could never fund them. Let's think about that. And in this case, I don't want you to say the name of the person, but I do want
Sure.
you to be honest about the interaction.
I think just anything. I always tell people I'm looking for one of two things. I want to know you're dishonest or you're stupid. These are great shortcuts for me. If I find out you're dishonest or stupid, I can just be done. It's awesome. I can save my time.
Easy, no.
Yeah. So the number one thing you can do is you can sort of exaggerate, or you can say something that's maybe based in something you think could be true in the future. Like, I have this guy as an investor, and I go check with them, and they haven't heard of you.
Whoa.
Right, you're trying to leverage something that's not real, and I value
Leverage
integrity.
something that's not real, also known as a lie.
Yeah, I value integrity very highly.
Sure.
So if you're
That's
going to
all you
lie,
got, right?
if you're going to lie, or you're going to prove to me you're dumb, I can be done, and that's awesome for me.
Right. So those are quick filters,
Yeah.
and you're surprised at how often you're able to apply that filter, I'm suspecting.
It happens regularly, yeah.
Regularly.
I mean, you meet with somebody and they'll tell you, something is true, and often it is a sort of social proof kind of situation because people understand the potential value of that. You go talk to the other person, like, no, I didn't tell them I'm investing. No, I didn't tell them I'd be their advisor.
So they're overplaying their hand.
Yeah.
Right. And so the advice to young people is just never overplay your hand. Be honest in all things. Be honest and have integrity.
And in TechStars, it's day one orientation. We say, look, we want to see warts and all of your company, right? We're here to experience the things that aren't working, help you fix them. And I think, you can probably think of a lot of your business interactions when people have had something really bad about the company and they've been transparent and fixed it.
Yeah.
You feel a lot better about them.
Oh.
That's the line, not dot, or curve, not dot thing.
Right.
Right.
I mean, for me, when somebody can be honest and just say, this is a disaster. It's not working.
I don't know what to do.
That's when I get engaged. I'm like, all right, let's go.
Yeah.
Mission Impossible, I'm signed up. Let's go do it. What the odds are insurmountable. Chance of
Perfect.
death is high. Let's go.
Yep. And every company that I've ever run, that I've built, I can think of at least one occasion where, we totally screwed it up with a customer,
Yeah.
right? They hated us. We just came to them and said, yep, we screwed it up. And then we fixed it, and they were then a customer for life. It's the same kind of thing, right? It's dealing with the actual problems and being honest about it. That's what we want to do. We want to help.
What's the toughest thing about being a founder? Now that you've worked with so many and you've been your own, and you've opted out of being a founder of a company and said you're doing Accelerate, which I understand is still a company, but you opted out of it. Was it just too hard and soul crushing for you to just keep doing startups? I mean, I know a lot of people who did startups. It was so hard. After a certain point, they said, I put my 20 years in. I'm just going to be an investor. I'm just going to do that because it's a lot easier.
So I did 3, and I
Yeah.
had one that failed. It was called iContact, but you've probably heard of that.
Yeah.
We sold on the domain name. It was the most money we ever made in that company. So it wasn't my iContact, but the other 2 worked. So it was 2 in 1, and I had 11 startup ideas.
Right.
And one of them was this idea of a new type of incubator.
Right.
And literally, I was thinking about doing other companies at that moment.
Yeah.
So to me, this is a nice hybrid of an operating business and a venture business.
Right.
And it's why I like it. You do get to a point in life. I have 3 kids, right? It's you want a little bit more balance in your life.
Yeah.
I don't have it, but you imagine that you would get it.
Yeah. Well, you have a little bit more than if you were in the binary state of 0-1 startup. I mean,
Yeah.
you do have a little bit of hedging here in that you've
Yeah.
got an interest in so many companies.
That's right. Yeah, and it's going to work because of the the distribution of the investments and how well the companies are doing. But it still is for me today. We're 32 people now, and I feel like it's year 5 of a startup. It's really the same. And we're
Now it's like you were trying to start something lightweight. Now you got 30 employees.
Yeah.
Suddenly.
Yeah, and we're in all these locations and doing all this stuff.
you're
But it's the entrepreneur inside you wants to do more and do it well.
What do you think is the biggest mistake a lot of young founders make these days in terms of once they're operating a company,
Yeah.
once the company's funded, what do you see as the number one issue or the top couple of issues that this sort of seed-funded entrepreneur is facing in 2012, 2013?
Well, I think a lot of them still don't recognize the value of the network and surrounding yourself with people that can create connections and create leverage for you and give you feedback and help you not make all the same mistakes. So, they get inward focused. They raise the money. They have all these great investors sometimes, or sometimes they don't, and they get just heads down focused without sort of bouncing it off the people that are around them. And sometimes they're right, and what they're doing is perfect, and that happens, right? That's Facebook once in a while.
Yeah.
But most of the time, if you leverage those people around you, you end up with something much better. And I think they sometimes don't do it well.
They isolate themselves, don't they?
Yeah.
They don't talk until it's a disaster. In some cases.
Yeah. The next time you hear from them is, we need to raise another round.
Yeah, we got 30 days left, 60 days left, and you're like, wait, what happened to 6 months ago or 12 months ago when we could have actually worked on the roadmap? Now you got no roadmap. You're facing the plank.
Yeah, and I think there's also a lot of companies out there that have done these party rounds. So they don't have a strong investor that's actually engaged in the business.
Explain what a party round is. Just
so
people
there's
don't...
no lead investor in a party round. It's just a bunch of angels that get together and sort of do it. Nobody's on the board. Nobody's really driving it.
Yeah.
But everybody's willing to do it.
Almost too much founder control.
Yeah, and look, it's great for the founders. It's fine, but when you're in that situation, you don't have someone who's sort of got their nose in it a little bit and can vouch for you with the other investors. So when you come back for more money, it's like, we haven't heard from you guys in a year. So make sure to engage those people around you, whether they're investors or
What's the best way to do that? I mean, I have a couple of startups that send me like their monthly report. Here's what's going well. Here's what's not going well, and here's how you can help. You might actually be an investor in this company that does it particularly well, that I think we both met at the Open Angel Forum back in the day. But, a number of entrepreneurs have taken to this monthly, what's going well, what's a challenge, how you can help, email. You like those?
Good, bad, ugly is what we teach. I want to know the good, the bad, the ugly, but just bullet points, ticker style.
Ticker style,
if you will.
Brevity.
And then at the end, in red, or really make it stand out, not way down the email TLDR, right?
Yeah.
But somewhere easy to see, what are the one or two things I can do to help you?
Yeah.
So if anybody knows a high-level contact in this company, or if you play with the product and give us feedback on this feature, that would help us.
Yeah.
So those are the ones I like, and we train that into our companies.
Awesome. And looking into 2013, what is your outlook for the economy, and do you think about that in general? Like, it seems like the economy is very strong, unemployment's lower, people debate it. How much does the stock market, M&A activity, all the stuff impact startups? I mean, you must have to think about this because you're running an accelerator, which is a group of them, but should individual entrepreneurs be worrying about these things?
I don't think so.
Yeah.
I mean, I think you just play your game and play through it. You can't control that stuff. There's nothing you can do about it.
Right.
So you need to build a great company no matter what happens in the macroeconomy. I don't worry a ton about it. I mean, there is going to be some ebb and flow in the number of angel investors out there, but the ones that are good will just play right through it. We're focused on trying to get quality investors for
What
the
impact has AngelList made? I mean, this...
Huge.
Yeah. How?
I think just awareness. It's always been a social sport, angel investing, right? You call up someone that you think is good and you try to syndicate a deal you're working on. AngelList just makes that easy.
Yeah.
Right? And I think it's been a game changer for startups that deserve funding to get them out in front of people. All the sort of $1,000 crowdfunding stuff I think is less impactful. I think really it's been the building of the social network around these investors.
Deeper bonds between investors?
Yeah, I mean, I sort of know what you're looking at. I know what you're following, and
what I've invested in.
Yeah, I can see that stuff, and I can sort of use those signals to maybe go look at a company I haven't seen.
Yeah, I found it's particularly powerful when I've referred somebody to it, or I actually do an investment. So I just invested in Whittleby because Sean Percival worked for me and he was asking for advice, and I was like, well, I actually like what you're doing. It's good. I'll put a little money in. But then if I invest now as one of the top most followed people there, it really is like this, it's this like amplified signal now when you're in the top 10, I think, too. And so when you invest in something, you just, you have to be careful though, right? Because doesn't everybody want to put you down as an advisor or the referrer? How do you handle that?
I'm just really careful about what they put me down as. So if an advisor means I'm actually pretty involved in the company, it doesn't mean I'm taking equity for me.
Right.
That's my rule about it. Investor means I've actually put money in. Right. So I mean, I just make sure that it's true. But I think that the biggest thing too is just like LinkedIn. If you want to meet a person or understand them, you send their LinkedIn profile. Now you do that with a startup with AngelList. right?
Yeah.
So it's kind of their calling card almost.
Right. Now, you're not big on the $1,000 crowdfunded approach. I looked at it and I thought, well, if Naval is pre-screening those in the same way you're pre-screening them, and he does 100 of those a year, or let's say he does 200 of them a year and 100 actually close the $1,000 funding. If I put $100,000 into that, that could be a nice like mutual fund in a way. What do you think of that?
Yeah, the idea of just diversifying a bunch of money into a bunch of stuff that are vetted by other people. You might as well be an LP in a fund, I think.
Well, yeah, which is, I'm already an LP in the top fund, so
yeah.
Why am I doing that is really the question, yeah.
Again, I'm not saying it doesn't matter, it's not important. I think it's a great way, things like, there's Funding Club and there's other things that sort of aggregate.
I just saw Funding Club.
Aggregate this little bit of money, and for the startup, it's good because I only have that one investor. I don't have to deal with $1,000 investors.
So it's cleaner on the cap table.
Yeah.
However, you do have this party round where nobody's in charge. And diffusion of responsibility.
That's right. So it's just money, right? So in the same way that just money can be good,
just money can be bad.
That's right.
Interesting. And what do you think of the M&A space? We've seen this massive push of acqui-hires.
Yep.
I've been at the receiving end of a bunch of these. Now, for me, angel investing is a little bit of a sport. I'm not as like cutthroat on my returns. I know that given my access, 1 out of 25 will turn into an Uber, which in fact Uber turned into Uber. So I'm golden, right? Like I'm going to do okay based on the fact that I have access. But I think for a lot of angel investors, they're starting to see acqui-hire, 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 no singles, doubles, or triples. And an acqui-hire means you just get your money back. If that. Mm-hmm. And I've had a couple of these. Is this turning off a large amount of angel investors? And are the M&A people on the other side poisoning the angel investing well by being so cutthroat to just acqui-hire these companies instead of putting a little icing on the cake for angel investors? Yeah.
Well, we see every case. I was dealing with one case actually today, which is basically a company that there's an exit opportunity that's pretty attractive, right? It's an acqui-hire. It's of that scale. It's the technology's 3 months old,
right?
But it's a great team. And then you've got, on the other side, people trying to fund the company. So a term sheet is a term sheet in the sense of, trying to improve the position that you're in.
So the term sheet from the VCs becomes leverage to the acquirer and saying...
And vice versa.
And the acquirer's term sheet, they can go back there and you can work those against each other. So the advice is get an investor term sheet to push up your acqui-hire or use your acqui-hire to get a good round.
Exactly. And you have to make a decision at some point, do you want to sell to this company earlier or are you trying to build something big? And sometimes I'm seeing these, what I call acqui-hire plus plus, right? Which is there is that competition between investors and the company that makes the acqui-hire more attractive. It almost becomes a bidding situation. Where it gets into the 10, 15, $20 million range, even though it's a few months old.
Right.
That's pretty hard to say no to if you're a 22-year-old, first-time entrepreneur.
Right, you're going to make $3-4 million, and you're
it's not why we're doing it, but we always are supportive of what they want to do.
Right, so in that case, you can't say, you're not going to deny them, and nor can you.
No.
So you got to go with the flow, and you never know what that entrepreneur's going to do next. But God, Saka was on here talking about the bad behavior of Facebook. I'm not going to have you confirm or deny that, but a lot of cases, they're loading individuals up in employment packages, giving the angel investors back maybe their money, maybe half their money, and hey, now the founders have $2-3 million, $4 million in Facebook stock, plus they made $1 million or $2 million bucks, and we all, as the angel investors, got hosed.
Yeah.
And Facebook, by the way, has billions of dollars in cash. And they don't seem to be behaving well in the ecosystem, whereas like a Google seems to be behaving just fine and understanding that the angel investors need to make a little money to keep the ecosystem going. Is that a trend that you're seeing?
Yeah, and again, I'm not going to put it on any one company. but you certainly see, the compensation being loaded into, their employment package, right, in the form of options or whatever. And I think, it's kind of the entrepreneurs really need to stand up.
Well done. There's your first cent going. Oh, that's 220.
Wait.
There it is. He had it queued up. 10, but you did it.
I'll pull 10 out again. Right, did I actually say the full word? I think I said shit.
All right, so
we'll have to play that. We'll play it back.
Well, you know what? We'll do.
Do you make change or
this
no?
This season, the NBA got together. We have instant replay if it's within the last 10 minutes of the program. Okay. We can throw a flag. We'll go to the instant replay. We'll see exactly.
But I can't call it.
Shh. No, the ref does. Brandis, the
I
ref
got
out
it.
there. Kieran and Brandis will do an actual. That'd be actually pretty funny on the next show. We could actually play it back and see exactly how much of the.
But on some level, right? I think
Yeah.
the entrepreneurs in that situation need to do right by the people that put their faith in them.
Right. So it's really, the acquirer being so cutthroat and evil.
And most are not. I want to be clear.
No, but I mean, now we've heard of Facebook doing this so many times that I can say it outright that this is like a Facebook now is, and somebody who worked at Facebook told me that the approach at Facebook is so cutthroat that if you can screw somebody internally, externally, and get the best deal, that's what you need to do. They just have this, and you can see it in the way they just copied Snapchat with Poke. They just have this absurd, it's us versus the world, screw everybody mentality.
Yeah.
And you know what? Now, as Saka sort of explained, and other people have said to me, people are just not going to them. They're just
If
not
they're
bringing
serious,
stuff to them.
That's right.
And they're starting getting this reputation of don't trust Facebook, with your angel portfolio if you're an angel investor. And if you're a startup, expect them to screw your angel investors. And the message to the startups, is you may only sell your company once to Facebook, but you may raise money from the angel investors multiple times. I've had Mark Cuban invest in multiple companies of mine. I'm not screwing Mark Cuban ever.
Right. And
Mark
it's a
Cuban's
small
getting a
world.
return in my world. Yes, and it's a very small world.
They're going to talk to each other.
Of course.
Yeah, and there are other companies that you
Think it's
see
true.
the behavior of, it's not just the structure of the deal, but, bring in the company, learn everything about them, then copy the product, right?
Yeah.
Okay, all's fair in love and war, I guess, but on some level you get a reputation in the ecosystem for how you behave as a larger
Well,
corporation.
this was the thing, when Y Combinator said they were bringing Facebook in, I said, are you kidding me? You're bringing that fox into the hen house? That was the most insane thing. And then Paul Graham got on his high horse and said, I don't know what I'm talking about. Well, I mean, Paul, obviously I was right about this one. When you see Facebook just brutally copying Quora, brutally copying Groupon, brutally copying Foursquare, brutally copying Snapchat. I mean, they have just absolutely raped and pillaged the startup ecosystem, and you're bringing them into. Would you ever let Facebook into TechStars to look at the companies? If they said we want to do something?
Early on, Facebook was around. We're part of their, online program where we get support.
Yeah.
But we've kept it mostly to the sort of online. And we found that those big companies come in, they really just want to sort of talk about what they're doing.
Yeah.
And there's a time to bring them in, I think, for
Right.
individual companies.
Yeah, you
But
just
we
gotta
have
be
had them. We
careful.
have had them involved a little bit.
Yeah, just got. I think you got to be careful. And the reputation is undeniable now. Would you say
It's certainly out there.
the reputation is out there?
Yep.
Yeah. So it makes you the antennae go up, and the antennae with a Google. Let's go through Google as in terms of M&A. What do you think of them? So one of your startups comes to you and says, "Hey, I got Google. They want to look under the covers. They want to come in. What do you think?"
We're connected enough to enough people in Google
Yeah.
that there's a sort of trust relationship, right? Generally they've been fine around
Right.
TechStars. Great, actually, around TechStars.
Microsoft, you obviously run a program
Yep,
with them,
yep.
so you feel a high level of trust with them.
Absolutely, and we've been through cases like this with them, and they behaved really well.
And
Generally.
AOL, clearly, you sold a couple companies to
Couple,
AOL.
yeah.
They've been a great M&A.
Yep.
And what do you think of Yahoo and Marissa?
Look, I hope it all works.
Yeah.
I'm excited about the vision that she has and she's presenting, and time will tell.
Yeah, it feels like she's got the culture turned around already.
Yep.
She's got a bunch of the right people on the bus. Some of the wrong people, I guess, are off the bus now in the good to great sort of metaphor. And if you do that well and you're good at getting attention, all she's got to do is now bake a couple of good products.
Right. I mean, now you just have to execute. Right.
Yeah.
that's easy.
Right. Well, but I mean, I have to say, getting culture turned around in a place
It's
like
huge.
that is huge.
It's huge.
So to get the communication and transparency, I got to give Marissa a lot of credit. I mean, now you got those Fridays where they talk to everybody. And I saw a thing today was so genius. They started sending packets out to people who left Yahoo saying, welcome back, come back.
I didn't see that.
So they went through the great performers who left and sent them like packages like, hey, consider coming back.
Interesting.
So
I know several of them, so
yeah.
I wonder if they got them.
Are there too many?
If you didn't get them, maybe they don't
Yeah.
want you back.
Maybe that's okay. Yeah, that could be a tell too. Are there too many startups in the ecosystem now? Is there such a thing as too many startups? Are people going after too small, I guess is another way to say it, too small of an opportunity?
My answers would be no and yes.
Okay.
I don't think there's too many startups. I encourage everyone that has a dream to follow it and go for it.
Right.
Many things that are out there today they do sound small. But I think you have to also remember, and I think people get a little overly critical of the first thing they see coming out of a company. often it turns into something much bigger. It's just a starting point.
Right. The pivots come.
It's easy to criticize, you're doing something that's just, it's another photo thing.
Right.
Until it turns into Instagram.
Or
right?
you're just doing email reconciliation and it turns into SendGrid.
That's right.
Yeah.
So, I think it's, don't judge too quickly, right? Look at the team, look at the broader market. Yes, there's a lot of Me Too stuff, and yes, there's some people that's all they're thinking about, and that's not great activity, but the fact that people are out there following their dreams and have access to capital is great.
What's your biggest mistake in terms of not accepting a company? Because you could talk about that. That's fair enough. That's like a compliment to the company.
Yeah, this sort of anti-portfolio.
Yeah, like what did you screw up, either on an angel investment or accepting into TechStars, and say which was the situation?
I don't know. I mean, I remember like WePay. It would have been fun to take a shot at WePay.
Yeah.
I don't think that actually ended up, I don't know how that ended up, but I don't think it was necessarily great. And I thought it was a really interesting idea, and we competed for them. Didn't get them. Yeah.
And you competed for them, and they wound up at another accelerator.
Yeah. And at the time, we were just in Boulder, so we were competing on sort of geographic basis.
Yeah. A lot of smart people coming to Boulder. Why is Boulder so filled with these like hyper intelligent, athletic, like master's
people
degree.
like me. Yeah.
No, it's crazy. Like I go there and I just like was tweeting like it's just like it's so depressing because you go and it's like, yeah, I've got 2 masters and a PhD, and I just went rock climbing this morning after my yoga class, and I'm having my like vegan breakfast, and then I got to go to the office and work on the startup, and then I'm speaking tonight at this event, and I'm like, yeah, I'm just barely getting out of bed to watch the Knicks game.
Yeah, and then you're like, even I live there, I'm riding my bike along, and like, some 80-year-old incredible athletic woman just flying by you, right? Like, there's like always somebody more amazing there.
Yeah.
It's just, it's one of those places, it's only 100,000 people, and it's in the sense of, Colorado, it's an expensive place to live, not compared to, LA or San Francisco or somewhere.
But New York. Yeah.
Right. But it's, you have to be there for a reason. You have to want to be there. And so it attracts, sort of the hippie culture, crossed with like really ambitious people.
Right. It's hippie ambitious.
We like to say that we think about half the community is involved in some kind of entrepreneurial activity. They're either an early employee at a company, or they're starting one. So the density of entrepreneurship is just really high.
Yeah, interesting. And the other half work at dispensaries, basically.
Pretty much, yes. Pretty much.
But it just seems like it's just such an ideal place. And a lot of people leaving the Valley, leaving LA, I know some developers who worked for me, I sent your way, a lot of folks just saying, I'm going to go to Boulder.
Yeah.
I'm like, what are you going to do next? They're like, yeah, I'm just going to go to Boulder. I'm like, well, what are you doing? They're like, I'm just going to go.
Yeah. Do you want to live in a place that's smaller? It's near Denver, right? It's half an hour away from Denver. You can get, sports and culture stuff. But, it's a small town, college town, beautiful setting, where there's a lot of startups and entrepreneurship, right? So, a lot of people are choosing it just for that reason. And
what about New York and Boston? Those programs seem to have done particularly well for you guys.
Yeah.
What is it about those ecosystems? I mean, New York has exploded.
Huge. Again, almost 1,700 companies applying there.
So that's double the other places or something?
Yeah, it's significantly. I mean, some of the other places get closer to 1,000.
Yeah.
So there's a volume of activity that's huge. It's also a place that attracts, international companies that want to land and come there, right?
Got it. Port of call.
And it's a good place for them to sort of enter the U.S., I think. And it's exploded in the last, 3 or 4 years, really. Great investors like Fred that are there and lots of others. So.
Yeah, Fred has really sort of, I think, taken it to the next level with his group of investments, but he hasn't made an investment in 18 months to his own admission. What do you take on that?
He's about to make one, I think.
Really?
Oh, yeah. Good.
He did say he was working on something.
Yeah.
Is it something that you're related to?
Hope it doesn't fall through. I can't say.
Oh, well, that's a yes. My poker intuition tells me from the 17 signals you've sent that it's a yes. And when you have a great company, is he the first guy you go to or amongst the first?
Well,
because you must have a list.
Yeah. I mean, there's some people that we do love to see investing in our companies. He's certainly on that list.
Give me a short list. Who's the people that, I mean, I know you're going to leave some off, but just give me a couple of people off the top of your head.
Obviously Foundry. I mean, we're super close to Brad and those guys.
Yeah, it's a layup. What makes him so great? He's just got such a great reputation.
He's just really smart.
I
think all 4 of those partners are just really smart.
Just raw intelligence.
Work their asses off.
And they're hardworking, huh?
Now I owe you 20.
No, ass is fine.
Ass is good?
Ass is good.
So I can
say 7 dirty words. You can say ass till the cows come home.
Okay, ass.
If you say the C word, we're going to have an unprecedented fine.
Not going to do that.
Nobody's ever said that.
I would never say that word.
There's a lot of Fs that have been dropped. Chris Sacca has the 72% of them.
Love the first round guys.
Oh, really? First round?
Love
Josh
those guys.
Koppelman.
Love Soft Tech, Jeff Clavier.
Oh, Jeff Clavier is great.
I mean, there's tons, right? I mean, but they do a lot. We work a lot with them in our companies. And
What do you like about those? Let's go to Jeff in first round. What is it about those firms that makes you comfortable sending, the best hatchlings from TechStars?
They work hard for their entrepreneurs. They really work hard. They are active. They try to make new connections, try to get them customers, pimp the products.
Yeah.
And I think that's the attribute of a great investor.
Is the hard work they put in.
Yeah. It's not just a lot of work, but it's the right work that really helps.
Interesting. What is the right work for an investor to do?
So get me distribution, get me introductions, right? It's not just throw me on Twitter and tweet my job openings.
Blow me up, yeah.
Right? Send me an amazing, VP engineering, or, get me in an article that really changes the trajectory of the company, right? With media,
Right.
Or bring me 10 customers, right? Like I think Jeff with SendGrid, the number of customers that he's brought to that company and the Valley is just huge.
Interesting. So superfan Jeff, you're here.
Yep.
You have a question. You're a superfan.
Yeah. Wish
How
I
long
could
you
have gotten
been
a haircut before I came on.
How long have you been watching the program?
I started, late 2009.
Okay.
It was after you had done a Startups Uncensored with Jason Azar.
Oh yeah, sure. That was fun.
And
So you have some favorite guests? Who are your favorite guests?
David Cohen.
Well, there you go. But okay.
I got $10 for him too.
Yeah, exactly. What else? Who else your favorite guest?
I thought Brad Feld's episode was pretty awesome.
Particularly good.
Chris Sacca, obviously.
Yeah, great episode.
Jeff Clavier was a great guest.
Okay. And now, what is it that you do, superfan?
I am a software engineer.
Mm-hmm.
And
Are you working on a project now? Are you at a startup?
I left a startup
Okay.
to join. I just got a job just before coming here.
Oh, great.
So
Like literally before coming to the studio?
literally,
Oh, well,
signed the offer
congratulations.
letter.
Can you say what it is or no?
I'll tell you off air.
Okay. Startup company or a big company? In between?
Yeah.
A tweener. Okay, very good. So you have a question for David? Let's hear it.
Yeah. So the recent pattern of accelerators has done well to democratize startup and democratize fundraising. Do you envision a future where that actually turns on itself and they become a gatekeeper in a way, and how do you prevent that?
Well, I don't think the best investors will let it become a gatekeeper. I think the best investors will find the best investments. It certainly is I think TechStars and other accelerators act as a filter for the VC community, right? So they can sort of focus their energy on looking at those companies. But I think, now I don't see it becoming an absolute gatekeeper where that's where all the deals are.
Yeah.
I think it's making a dent in the way venture capital works, especially at seed stage. And I think, expect to see some of the accelerators, getting involved in the follow-on funding and not just doing seed to kind of protect ownership, but, in concert with the venture capitalists around the system that can really fuel the company.
It seems to me that the VCs out there love that these accelerators exist because it's almost like everything comes to them leveled up. And if the valuation is slightly higher, but as long as the valuation isn't disproportionate to the improvement in the quality of the startup, then it's a net benefit for them.
Well, there's two types, right? There's the type that get it and the type that don't. Right? So, and they all like it,
Right.
but some of them like it for the wrong reasons.
Got it.
Some of them come to demo day, right? They show up at the end and they see these polished pitches, and they like it because they're getting an efficient view of the companies. But the criticism would be, well, you just put lipstick on the pig, and
Yeah. Too much
all
showmanship,
that,
not
right?
enough substance.
If you're saying that and you're a VC, you don't get it,
Right.
right? The ones that do get it engage in the program.
Right.
They come, they mentor, they see the curve, the line, not the dot.
Right. They're
demo
coming.
day.
They see week 2, week
Okay.
6, and week 12.
So if inside your firm and you're a VC and you're thinking to yourself, these things are just show and tell day and it's a play,
Right.
You're engaging at the wrong moment. Engage earlier.
The people who run these accelerators, and there's been a large number of them,
700 plus.
I have seen a trend of late that a lot of the accelerators that are emerging are run by people who were unable to run successful businesses. Is that something that worries you in the same way it worries me?
I think it's something to keep an eye on. I'm actually, my article in the WSJ Accelerators this week is about, are entrepreneurs turned investors the only good investors, right? And I think the answer to that is no. I think there's plenty of people who are good investors that didn't have great startups.
Fred Wilson's a pure investor, right? He's always been a VC. I don't think he had a startup.
Yeah, and there's plenty of people like that. And so I think that if you get the combination of the two, you have an advantage, right? Great investor and great entrepreneur, because they've actually lived the war.
Right.
Right. So,
but that is the advantage if you're, in most cases, being an entrepreneur and is the big win.
Yeah, I mean, I think if you can get to an investor who has that experience, they're going to be able to talk to you about the actual experience instead of just the financial piece or just their own learnings from having watched a bunch of companies.
Interesting. Yeah, I am a little concerned right now, I have to say, because I was meeting with a couple of the companies coming out of some of the accelerators, and like one of the accelerators sent me 3 companies. I met with all 3, and I was like, just flabbergasted at how bad they were.
Yeah.
And I said to them, like, why wouldn't you do this? It seems like this would be a better opportunity. And they're like, well, we were told not to do that and to do this. I was like, who told you that? They're like, the accelerator. I was like, oh my God, the accelerator just ran you off a cliff.
Yeah. There are some that are not good.
Yeah.
There are a lot that are not good. I think many of them, even if they're well-intentioned, will not be good. We know that we've seen a stat that over half of the accelerators that are out there have never gotten a single company funded or had a success exit.
Really?
Right. Now, keep in mind, a lot of them are really new.
Right. So there's a lot of runway there.
But, I think...
So looking at the track record as an entrepreneur is critical.
Absolutely. That's why I've been pushing, every accelerator ought to publish their portfolio. Right. It ought to be easy like it is with TechStars. You can email any TechStars company founders at their domain and ask them about their experience. Accelerators should make that easy and be transparent. There are a lot that are going to suck, and they're going to take a long time to kill because they're not that expensive. So
anybody who's been in your program, if you type founders at TechStars, it goes to them, or founders at their company?
SendGrid, for example.
Oh, okay.
Right?
Goes to the founders.
Yeah.
And so that's a great hack. And you can say, tell me about your TechStars experience.
Yeah, and it's just, write whoever you want, right? We don't care who you write. If you think they were like you, send them a note. And the founders had such a great experience that they're willing to answer those emails. Now, there are plenty that are well-intentioned, they're trying to connect them with mentors, but like with developers, if you're going to start a company, you've done this many times, you're going to hire developers, you're going to hire the top 1% if you can. Right. In the same way, you want the top 1% of accelerators, the top 1% of mentors who bring the top 1% of investors because they're 10 times better than the next 10%.
Right. They're just going to have that much more efficiency.
Right. So, there's a big variance in quality in the accelerator world. And I think, this transparency that we can provide will help with that. We need to do it.
And would you envision a time when you'll actually open up in the Valley? Or is that just like, it's too frothy for you?
You never know. Right. I mean, right now, I think...
You must have been pulled into there many times.
Of course. We get asked all the time. And... I think for us, our DNA and our origin story is really about building entrepreneurial communities. And the Valley community is sort of fully mature and fully built. So, we're in places where we think we can, really have a meaningful impact by putting our model into that community.
What are the next 2 or 3 cities you're considering? Or would consider?
Austin? I don't know. Maybe.
Austin seems like it's pretty rough.
Austin's got a lot of stuff going on. Yeah.
DC, Chicago.
I think, Accelerate Labs is in Chicago. They've done a great job with their program. Obviously, LA, lots going on. Mark's got an awesome program here with Sam. Mucker Labs here. There's a bunch of programs here.
There's too many programs here, I think.
I think there's like 10.
I know of 6 or 7. And I have to say, I'm thrilled by it.
Yeah.
I do think that the first run of classes is going to be majority fail. I think it's going to have a higher fail rate than average. But I do think I'm interested in year 3. So I want to see which accelerators make it to year 3, and then I'm going to lean into year 3. So most of them are in year 2, like Mark's in year 2, and the difference between 2 and 1 is just striking.
And
I
you're
think
right.
year 3 is going to be the winner.
Your instinct is right, because we've actually seen in year 3 is when we had the level up in our classes in every city we're in.
Really?
And it's been very noticeable. Seattle went through it just now.
Yeah.
Boulder's year 3 was SendGrid and those companies.
I feel like year 1 is just like you're panicking to get the thing underway.
Yeah.
You're just trying to get something going. But year 2, you've learned some lessons, but year 3, you're like, okay, we've actually seen what didn't work those first 2 years, and that's for real.
That's right. I would just tweak it and say it's not which ones make it to year 3, because almost all of them will. They don't cost that much money, and people are pretty motivated, right? If you're an entrepreneur with an exit or someone with some cash, you're going to run it for a while. Yeah. It's not that costly. But year 3 is the one to look at for, do they really produce, potentially billion-dollar companies, right, coming out of the program.
Interesting. And is that the benchmark for success today? Is that what you're trying to do, is get your companies to think big billion-dollar opportunities like Sequoia does?
We certainly want to fund a lot of those.
Yeah.
We actually like having the diversity of people who, we're not going to fund like a pure lifestyle business, but if
Right.
somebody says, look, I want to change the world in this way and the market's only a $200 million market, that's okay, right? We're investing very early so it can work for us in seed. We do want a lot of shots on goal at companies that could be very big.
What do you think it takes to make those today? I mean, we're seeing this incredible acceleration now. I mean, nobody could ever imagine an Instagram, a Pinterest.
Right.
Some of these things are Airbnb. Some of these things are just growing at phenomenal rates.
Yep.
That really you haven't seen before. I mean, at least not in our 20-year history. I mean, the big successes, even a Twitter is a big success, is a 7-year story. Facebook's a 10-year story. These things are accelerating much faster. Why are things accelerating so fast?
They're hitting a nerve, right? They're in a seam and they hit on something that people really want, and then they get copied all over the world. Like there's a whatever's working in the U.S. Groupon and whatever at one time. There's a million of them all over the world. Right. Airbnb, we're seeing that today.
Yeah. So that actually benefits them because it lays the groundwork for their brand to become the big one.
Well, I think in some cases, if they're not quick enough, the other brands actually take hold. We're seeing that in some cases. So you also have entire accelerators out there that are just copying the things that work in the U.S. and bring them to other markets. Yeah,
really?
Absolutely.
Well, the Germans, obviously, the Samwar brothers. When you see the Samwar brothers, like as an entrepreneur, it just makes you sick, doesn't it?
It makes me sick, and at the same time, I'm like, I get it from a capitalism perspective. Like, they're taking advantage of something that they can do, and you have a certain amount of respect for that. But yeah, it's not how I would choose to kind of, make a dent in the universe.
Now, if those guys came to you and wanted to be involved, they would fail your honesty and integrity test. You wouldn't want to be involved with those guys.
I don't know them personally, so I don't know. Maybe they're very straightforward about what they're doing.
No, they're scumbags.
I don't know.
No, I can tell you.
If you know them, you know them.
I can tell you they're scumbags.
Okay, I trust you.
I'll tell you why. One of the top entrepreneurs in the world that you and I respect incredibly, 5 years ago at the DLD conference, which is going on right now, this is a true story. He says, how you doing? Wow, I'm really excited about Mahalo. I think this human-powered search thing, it's, interesting. And I said, yeah, I'm not sure if it's going to work, but, here's why I think it might work. And he's like, so maybe I'll angel invest in that. And I said, wow, that's great. I'm actually, whatever. And he goes, I said, yeah, I got tons of people want to meet about it. And what do you think? I'm meeting with these like Samwar guys, up here. And he's like, oh. And I was like, what? He goes, well, let me just tell you, they invested in our company. This is a very, very famous public company right now that's doing tremendous. And they then copied it, pixel for pixel, after they invested in it and went through tons of due diligence. And I was like, that's the worst thing I've ever heard in my life. Like, they're the most evil people in the world. I was like, and he just said to me, he goes, well, I'm just telling you a couple of facts. You can make your own determination as to what you think about investing in a company, doing diligence, and then copying the company in your native thing.
Yeah.
He was... He's
good.
the nicest guy in the world. You know who I'm talking about now, probably.
It's not good.
Unbelievable scumbaggery.
On the other hand, if they came out and said, this is what we do, this is our model, right? And they were very straightforward about it, we say, okay, bring it. I wouldn't choose to do that.
Pixel by pixel copying that just infuriates me.
Oh, absolutely.
It's just, I'm going to photocopy yourself. Like, at least, if you said, oh, listen, Slashdot's interesting, but I think I can make it better with Dig, and then Dig is interesting, but I think it can be better with Reddit. Here's how I'm going to make Reddit a little more interesting. Okay, Reddit's interesting. I'm going to make something more interesting in Reddit. I'm going to add to the thing. But if you just photocopy it, God, that's just... And you have people do that, come in with a Pinterest knockoff or a Foursquare knockoff, and when you see something like that, how do you manage that?
Well, there's every single class we've ever had. Every year, there's something like that. We're the Pinterest of X. We're the Pinterest for dudes or whatever, right? And you have to just look at it and say, okay, that's a user interface thing. It's not. They're not going after the same market.
Right.
In many cases, they are, but they don't know they are.
Right.
And so they're 2 years behind the curve, and they're too late in most cases. It's just like I can remember the Groupon year. Everybody was Groupon for X.
Yeah.
Right. Now it's crowdfunding for Y. Right. Everybody's
There's
doing that.
so many crowdfunding sites. It's like there should be a crowdfunding site for crowdfunding.
There probably is.
We could crowdfund your crowdfunding site.
They used to say that about accelerators. There'd be an accelerator for accelerators.
Yes. Then the world just rips in half, and the space-time continuum, and the aliens come in from the other side. It's just madness. The crowdfunding thing, you think that's going to work or not? What do you think?
I think there's pockets of it that'll work. I think it'll have an impact on small business, right? The pizza shop that wants to buy new chairs, I think it's awesome, right? For the high growth startup, I think entrepreneurs are going to want capital from people that can bring more than just the money.
Yeah, although it does seem like the thing that intrigues me about it is if you have a fan base and you have fans, it reminds me of what's the team that the football team that has like the fans own it? Green Bay,
yeah.
Yeah, like the fans own it.
Yeah.
So then the fans are like, well, I own a share, and I'm, like they become
Huge.
like rabid, right? Like, so I kind of feel like, imagine if Path, like as an example,
Yep.
Dave Morin could raise money like crazy. But imagine if Dave Morin said, I am going to crowdfund Path, and you could buy a share of Path for $1,000 or whatever, and credit investors, or non-accredited could buy for $150 or something. And you then would feel this like vested interest in the social network that, it would just almost make it like a cooperative or something. I don't know.
I think we'll see some of that, right? I just don't think it'll be the majority of it. And I've already seen a couple businesses that's their plan. And I think it can be great in order to generate interest in the company, but it's kind of just like, if you go public, you have a bunch of shareholders too that care, but it's for an earlier company. So I think there's something there, but I don't think it'll be widespread.
I think we're ever going to get back to where small companies can go public again. We used to have like the benchmark was, you made 25 million, 50 million, whatever, 100 million in revenue, you could go public, right? There were this sort of, it was easier back in our day, right?
Yeah.
And now it's just like, if you're not making billion, like you, at all costs, don't go public, right? Like, and companies are like waiting until the SEC is like, got shotguns outside the front door saying you need to take this company public before we rate it. Yeah,
the pattern I'm seeing is the companies that are thinking that way and are on what they think is a trajectory to go public are really looking at the comps, and it's actually really interesting if you look at the data of the size of the company in each year. It's like very consistent for companies that go public, right?
How so?
This is a SaaS company going from 2 million to 8 million to 17 million to 40 million, right? The numbers of
the
companies
revenue
that
numbers
have gone public over time,
right,
in various years and what year they go public is really weirdly consistent. So it's almost like you have to be on that sort of path for it to work.
And you have to, in some cases, like you're designing your business around that path, and then that becomes the driving factor.
Which it shouldn't.
Which it shouldn't be.
Shouldn't.
Because you might leave money on the table and be making, like, we got to go from 8 to 20 this year.
Or you get into the same artificial, you're trying to hit a number and you're spending too much to do it or whatever.
Or gaming the system a little bit, getting people to pay in advance. It's all kinds of crazy stuff. What do you think the trends are going to be this year? I hate to ask that question because it's kind of stupid, but there are definitive trends. We did see, like, this collaborative consumption seems to really have struck a nerve and become sustainable, whether it's Uber or Airbnb or Blackjet or other stuff that's coming out, or Get Around. What do you think are the trends that you're starting to see? I guess mobile is obviously one of them. Is mobile peaked?
Mobile's like the one that's been there for 15 years, right? We've all been waiting on it, and you definitely it's heating up. Real progress is being made now that everything's so open and accessible. I'm still a huge believer in white space around the human-computer interaction stuff. So, we've seen the tablets take over, and we see all kinds of new interface. I still think there's a lot of room as we have more and more data in the world of how we interact with this environment that we're building.
So that would be things like the Microsoft Kinect, or other 3D type interfaces.
Yeah, and Oblong's here in LA. Do you know those guys, the Minority Report guys? I was in that early on. I love that kind of stuff that's just really forward thinking about how we'll interact with so much data in our world. And
how does that go from being Minority Report to being majority use case?
Well, I think you start to see conference rooms that are fitted with this kind of technology, and if you want to pull up the TechStars website to that screen, you just point at it, right? Things like that. And in the home, I think consumer electronics. Why can't we just put our hand out and turn up the TV volume? Right. Why do we have to find the remote?
Yeah, it makes no sense.
It'll get there.
Yeah, that stuff's coming.
So that's an area, we're working with Nike because we love the quantified self area. This is the most.
What's coming now? Because I've heard some scary stuff's coming. Somebody told me that. This is an inside source that Nike has some stuff coming out that's going to be mind-blowing. Like, forget about tracking steps, but things in your blood, things in your perspiration. What are the things that we might expect? Not from Nike, but from other places.
You can't talk about Nike, but I do think, our bodies are the most sophisticated machines that we own, right? And we hardly track them at all. Right. Whereas the other machines we own, we know everything about them.
Sure.
Right. So I think we're going to know everything about our bodies. And
what are the next couple of things we're going to know?
You're going to know, if you're relaxed, if you're, tense, right? What percentage of the day do you spend tense or relaxed? Warnings that, hey, David, you should drink more water.
Interesting.
Right. Early heart rhythm detections that look weird. Right. Just anything that can be a signal around, take care of yourself or improve your health. We all should care about our bodies, right? It's how we're going through the world, but we really don't measure much about it. Some of us step on a scale. I've done that every day for the last 3 years.
Right.
And I have that data.
Scale or the Fitbit scale. Or something.
And I can see, the patterns in that and the trends, right?
Right. Christmas, I gain 10 pounds. Oh, post-Christmas, I lose 10 pounds.
Yeah, and some of it's obvious, right? But when you couple it with a Fitbit or a Nike Fuel Band, right, and other things, you really learn a lot about yourself.
I really think that we have to figure out a way to measure glucose in blood on an ongoing basis so people can understand when they drink a soda or a glass of orange juice, which is essentially the same thing, or they eat bread, exactly how ice cream, bread, and orange juice and Coca-Cola are the same thing in terms of spiking your glucose and making you fat.
That's right. So we have this amazing computer in our pocket. Right. My view is that we're 5 to 10 years out from having something actually in your body measuring this stuff.
5 years out.
5 to 10.
5 to 10. So you just put an implant in.
It'll be tiny. Right.
It'll be
like
very
getting
tiny.
a shot or something.
Yeah.
I'm
and over like low power Bluetooth, it sends your glucose.
All this stuff is intermediate right now. Like I'm involved in a company that's making clothes that measure your body. They're just normal clothes.
Really?
Right?
What company is that?
They haven't announced yet, but I'll send you a note.
Oh,
they're still looking
that
for.
Would be great for launch.
They're still looking for financing.
I'm in. Are you in?
I'm in.
All right. See, there's your social proof. See, this is how it goes down because it's like it's this high stakes poker game that if Dave says he's in, I'm like, well, that has just mitigated all my risk because I know you have a high.
I'll get him at launch. I'll get him at launch for you.
Okay, perfect.
Good. And you can check it out. But it's so we're in an intermediate step where we're still wearing stuff, and it's a Fitbit that you clip on or it's a shirt that you wear, right?
Yeah.
That's all gonna go away, and I think it's just gonna be part of us, and that scares the crap out of a lot of people, but it's gonna help a lot of people.
Listen, David, this has been amazing. Continued success with the program. Everybody go to TechStars.com. And if you're going to apply for a program, I really sincerely think you should really focus on TechStars because you're going to get a lot of attention. The alumni group is incredibly powerful. And you get 100 dimes. So, you're going to get a decent amount of funding from it. And, they really care about the startups, which to me I've seen. And I've seen the quality of startups that have come out of TechStars. It's just unprecedented. Really great stuff. Follow at David Cohen. Jeff, you have a final question or comment here? It's kind of cool to come and watch the show.
It is cool.
How cool is it?
It's so cool.
Yeah.
I don't have anything cool to say.
Hey, you put him on the spot.
I'm just curious, like as a super fan who's you've listened to over 100 episodes?
I've listened all of them going all the way back. So
You've listened to 323 episodes?
Yeah.
Of an hour and a half in length, each 500 hours.
Probably,
he's an expert at this point.
So, yeah.
Let me ask you a question, in all honesty.
Okay.
How much have you learned from the program compared to the other sources of information out there? I don't know if what else you've got, you went to I don't know where you went to school or whatever, but how much have you learned from these interviews with these founders?
Tons. Certain ideas, it's like being privy to an inside conversation a little bit. Similar to like how Adam Carolla talks about inner workings in Hollywood that you wouldn't get normally.
Right.
That people are afraid to talk about. You're sort of bringing things to light, and it's enjoyable.
Oh, that's good. See, that gives me some motivation I can focus on. So getting that inside information is the reason you listen to.
Absolutely.
So if you can get something would be along the lines of inside information, inside information is good.
Yeah, it is.
Through email.
Or through the web or mobile or video. There's a lot of different ways to get inside of something, David. Inside of a topic with authority.
Inside the body.
You've really
piqued my interest. If I came into TechStars and I was like, hey, we got this project, inside.com, and you came in with a domain name like that and a Twitter handle like Inside, that would be like, forget if it's me or not, just some person, somebody you don't know, Joe Schmo, applies with the handle joe@inside.com. What does that signal to you?
They understand brand, certainly. They understand the power of having good domain name, good email, and they probably have a little bit of money.
Yeah. What's that domain worth, you think? and the Twitter handle. If you were to think, like if a startup came to you and said, hey, we raised $10 million in funding, we got plenty of money, we have the opportunity to get inside.com and the Twitter handle inside, what would you tell them would be an acceptable amount of their $10 million to spend on that?
Oh,
You're on the board.
500 to 700K.
Really?
It's pretty expensive.
Oh, yes.
Unless you were a master negotiator and you got it for less. Pretty good domain name.
You want to guess how much I got it for? Such a genius.
50.
I got it for 60.
Wow, that's impressive.
And I got the Twitter handle.
You're going to sell it for a lot more than that someday when you're old and gray.
Exactly. I got the Twitter handle because a journalist who had interviewed me, and you can't pay for Twitter handles.
No, you can't.
You can't. However, you could hire them as a consultant for $1,500
Yep.
and get the handle as a part of the consulting agreement. Or as a favor, and the consulting agreement is completely separate.
So I would definitely talk to you about TechStars if you're interested.
Yeah, I
with
could
Insight.
join.
Yeah.
That would be kind of mind-blowing if I joined TechStars.
I'm in.
That would be pretty funny.
I do have a
The
question.
I'd be like the 40-year-old freshman. You'd be like Rodney Dangerfield.
Yep.
Remember that?
Yep.
What was that school?
Back to School.
Oh, God. To my Gen Y millennial samurai, just rent this film because it's so funny. Rodney Dangerfield goes back to school, and he's like this rich, like millionaire type business tycoon. And he goes to school with this to bond with his son. It's some bizarre premise. But it is the funniest movie ever because he goes and he just takes over the entire university, and like he goes to business class and he just schools the, Ivy League business professors. It was pretty awesome.
You should do it. We've had mentors go through TechStars. It's happening now.
Oh, really?
Yeah.
I got to get more involved in mentoring.
You got too much going on, maybe.
No. I got to go and mentor because, I get a lot out of it. Like the show. This show is a front for me to just accumulate as much knowledge as possible to put into my other projects.
Same for me with TechStars. I'm just learning.
Exactly.
It's awesome to learn from these people.
Isn't it amazing how much has changed now to just 10 years ago, let alone 20 in starting a company? Like 20 years ago, you had never seen a term sheet until you got one.
Yep.
You had no idea what a liquidation preference is and probably were afraid to ask. Your attorneys didn't really know, and let alone M&A. Nobody knew how anything worked. And now everything is so transparent and upfront, and these programs get you to third base.
Yep.
So much easier.
Yep. Everything's out there dissected in detail and open source to use, and it's awesome for entrepreneurs.
I think it's great. I mean, and some people say it lowers the benchmark. I have to say that's kind of nonsense because I wasted so much time trying to figure out how to get a bank account open. Should I be an S corp or a C? I can't tell you. I had thousands of dollars in conversations with attorneys of what the difference between an LLC, an S corp, and a C corp is, and none of them explained it as well as Brad Feld or Fred Wilson or Mark Seuss or you or Naval on their websites.
That's right. Yeah, and now it's just go read about it and go do it. Now you can focus on what actually matters, which is your business, instead of all that crap.
Customers. Yeah. Hey, listen, thanks at MailChimp, thanks at ShareFile, bye at Citrix. Thank you at ShareFile. Great to have a new sponsor involved. If you would like to sponsor a partner on the program, well, tough luck. We're sold out for 6 months. How great is my life? Thank you, Jason DeMont, for selling out the program. But no, seriously, if you have a product that I love and that the team loves, we'll take you on as a partner for the program and you can support entrepreneurship. But if your product is like e-cigarettes or some kind of spammy product where you trick people into I don't know, doing the monthly subscriptions, this one thing, it's one of these kind of tricky radio style businesses. I'm like, I can't read that ad. I can read an ad for ShareFile. I use the product. I use GoToMeeting, MailChimp. I use the SendGrid. If I use the product, it makes it pretty easy to read it because it's I use this. Launch conference, March 4th, 5th, and 6th. David Cohen will be there, as will many of the TechStars companies.
We got 100K for that also.
Oh, yeah, you're accepting somebody, so there's a 100K prize. Thank you. I'm announcing that on Wednesday. Tomorrow we're going to announce that. Thank you for putting
did I just blow it?
Nah, it's fine. It's the people who tune in live and who get the show early, it's fine. I like them to get a little bit of something. But yeah, you're going to be putting up a $100,000 prize. So that's a BFD, as we say in the business, a big frickin' deal. And then the first hackathon will be the 2nd, 3rd, and 4th, or the 2nd and 3rd. The companies that win the hackathon, the top 5 companies out of the, let's say 50 or 100 teams participate, those 5 automatically get on stage at the launch festival proper in the launch alpha competition. The alpha competition is things that were made that weekend. I'm going to personally invest $25,000 in the winner and the co-founder of of HubSpot is going to also invest $25,000, so the $50,000 purse prize, and investors for the hackathon, which is sort of unprecedented. I think that's the largest prize in hackathon history. I can't find another one that's bigger, so it probably is. And then there's the 1.0 competition, the 2.0 competition, and the Demo Pit competition. Demo Pit is companies that have been around for under 2 years but are public already. 1.0 is a brand new company, brand new product nobody's heard of, totally stealth. 2.0 competition is an existing company. I confuse myself sometimes, all these competitions. Existing company with a new product or service or a new version. So you can participate. As long as your company is under 2 years old, you can participate. So send me all your great companies. Jason at launch.co, Jason at Inside, Jason at Mahalo, Jason at calacanis.com. And is there any other housekeeping, guys, that I need to know about? Go to youtube.com, search for This Week in Startups and subscribe to it, blah, 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 blah. We'll see you all next time on This Week in Startups.